So I have to admit, I sort of eye rolled when I heard Chair Powell say this line, but it's very, very accurate. He said, what do you do when you're driving in a fog? You slow things down. You tap on the brakes a little bit, and that's what they are doing. We are still looking for a Fed rate cut, another 25 beeps in December. Obviously, if we are still in shutdown mode, that would be. It's almost like it would almost be another cause for cutting rates, just because that there is just so much, again, uncertainty. We have 750,000 people who are furloughed and not getting paid, and of course we're seeing a lot of declines in all the benefits that normally being paid out at this time of year. So again, just with the lack of data, perhaps it would even suggest that we should be getting another Fed cut in December.
And Jennifer, we know that in past shutdowns, GDP has taken a hit, but then it bounces back. We gain back nearly everything we lost once the government opens up. Do you see that happening this time? Does this time feel different? And if so, why?
We are still looking for, we haven't actually touched our fourth quarter growth forecast just yet, but I think we're on the precipice of doing so. But, just given the fact that, the workers will be paid. At one point, by the way, there was a question whether or not all of them will be given their back wages, but it sounds like they will be paid. So we will see that. We should be seeing that bounce back. I don't think it's different this time. If anything, we're still seeing the benefit of lower or easier monetary policy, which is helping support, business investment, somewhat the housing market a little bit. So we should see that bounce back. I don't think this time is going to be that much different.
So, Jennifer, with the lack of economic data coming from the U.S. government, I think maybe investors might be paying a little bit more attention to really the fine print of corporate earnings we're seeing here. Is there anything you're gleaning from the earnings? We've had about 65% of the S&P 500 reports so far. Anything you're taking away from corporate earnings so far?
So far, they're holding up. Again, This is a little bit of a look in the rearview mirror, I'll have to say, but just the fact that the job market is still holding up. Obviously, things have slowed meaningfully over the last few months, whatever data that we have seen. But so far, we haven't seen a big drop off in jobs. Jobless claims are still hovering around similar areas at the statewide level. So that would help consumer spending, and that would continue to support earnings. But again, of course, all this uncertainty going forward is another question. So again, we still look for steady-ish growth, but slower growth probably in the fourth quarter, given the shutdown in the early months of January. But again, we're expecting growth to recover somewhat in at least the first half of the year.
And if these were normal times, what's normal nowadays, but if these were normal
I have
times,
no idea.
we would be getting an unemployment report from the government this Friday, and it doesn't look like we're going to unless the government reopens between now and then. So what will you be looking at specifically in terms of private data to sort of piece together the jobs puzzle?
So, we've always been looking at the private sector data, especially ISMs, the Conference Board, the ADP, because I've always said, one can never, ever look at just one piece of economic data, even though it's from the BLS as the be-all and end-all. You should be looking at all the different surveys of jobs just to make sure that we're all pointing in the same direction, because if we're not, then there is something wrong. So we continue to look at the different levels of hiring and firing, of course, and wages as well. But I thought it was kind of interesting that the ISM surveys, at least the one that we saw yesterday, was suggesting that that we're sort of on hold in terms of the job front, just given all this uncertainty still with trade. And of course, this was, I believe, taken before last week, before all the trade deals were secured by the U.S. administration and a number of the Asian countries, which is good news. And of course, the positive news coming from the U.S. and China, having that, I believe it's a 365-day pause now. So that is actually a good thing. But at the same time, just given this environment, you never know if that could actually be sidelined a little bit.
Jennifer, you're based up there in Toronto, so thank you for a great season from your Toronto Blue Jays. It was a great World Series. Thank you. Hopefully you guys are feeling okay about that. It was a great season. Well, how are you guys? But you're also Canada's our number 2 trading partner. What's the feeling these days about the whole tariff situation here? It seems to have kind of taken a little bit of a back seat here. How are you guys thinking about it day to day?
It's still very, very unsettling. I mean, given the fact that we are the U.S. is our biggest trading partner. 75% of everything that we export goes to the U.S. 55% of everything that we import comes from the U.S. Wow. So when we have these trade breakdowns, these talk breakdowns, especially recently, it's extremely unsettling. So, we are trying to, I believe that there are still conversations being had between high-level officials on both sides of the border, which is a good thing. And I will hope to cross my fingers that that this freezing out of Canada right now will come to an end shortly. Again, encouraging that the U.S. had all the trading deals with everyone else out there in Asia. They've got a little bit of a pause right now with Mexico, so Canada is next up. And, we've got the USMCA, which is a huge deal for both America and Canada and Mexico. And I don't think that can be lost on anyone right now.